NVIDIA stock is currently trading at $188.61 USD, marking a slight intraday decline of 60 cents or 0.32% as of the latest market activity on Thursday, December 25, 2025. While many retail traders see this minor red tick as a simple cooling off period during the holiday season, the reality beneath the surface is far more complex. We are seeing a massive shift in institutional positioning, where major players are no longer just buying the dip, they are engaging in aggressive rotation. While the retail crowd is distracted by short-term price swings and Christmas festivities, the smart capital is moving into sophisticated derivative strategies and hedging against the upcoming shift in the Blackwell production ramp. This isn't just a stock moving sideways, it's a coiled spring of institutional reassessment. The common expectation among the average investor right now is that NVIDIA stock will continue its vertical ascent indefinitely because of the unquenchable thirst for compute power. This narrative suggests that as long as large language models exist, Jensen Huang will keep printing money for shareholders. However, the deeper reality you need to consider is the looming inference cliff. While training chips have dominated the revenue mix for the last 2 years, the industry is transitioning toward inference at a rate that is catching many analysts off guard. If NVIDIA doesn't maintain its lead in inference-optimized efficiency, specifically against the rising tide of custom silicon from the big tech hyperscalers, the valuation multiple of 44.8x could face a sharp contraction. Investors are currently pricing in perfection, but the reality of 2026 will be defined by whether Blackwell's marginal gains in energy efficiency are enough to keep cloud giants from pivoting to their own internal designs. The recent daily swings we've witnessed have been largely driven by shifting narratives around the Trump administration's stance on H200 shipments to China, with the latest reports suggesting a mid-February shipment window for the second most powerful AI chips. The market is weighing the potential 25% fee against the massive volume of 40,000 to 80,000 units. This is a high-stakes balancing act. Institutional activity on the Interactive Brokers trading platform shows a significant spike in hedging activity, as traders are not just looking at NVIDIA stock, but are also diversifying into Fidelity ETFs that provide broader exposure to the semiconductor equipment sector. The volatility isn't just a result of retail speculation, it's a calculated repositioning. When you look at the SoFi Invest app or Robinhood app activity, you see a retail sentiment that remains stubbornly bullish, but the order flow on professional platforms suggests a wait-and-see approach regarding the upcoming fiscal Q4 2026 results. Market momentum in the semiconductor sector has been bifurcated. On one hand, you have the incredible $4.5 trillion market cap of NVIDIA, but on the other, you have a tightening supply chain that is still struggling with CoWoS packaging yields. Despite being sold out of Blackwell GPUs for the next 12 months, the risk lies in the execution. If there is a single hiccup in TSMC's production lines, the expectation of a $100 billion jump in sales could evaporate. This is where online investing gets tricky. People using Schwab Intelligent Portfolios or other automated investing sites often don't see the granular risks of fab utilization. If you are doing self-investing, you have to be your own risk manager. Are you watching the lead times on HBM3E memory? Because that is the true bottleneck, not the demand for the GPUs themselves. Let's take a step back and look at what this company actually does for those who might be new to the Fidelity brokerage environment. NVIDIA isn't just a chip maker anymore. They have effectively become the foundational architect of the modern tech stack. Their data center segment now accounts for nearly 90% of their total revenue. This is a radical departure from their days as a gaming-focused company. They are leveraging their CUDA software ecosystem to create a moat that is almost impossible for competitors to cross. When a developer builds an AI model, they aren't just using an NVIDIA stock asset, they're using a library of code that only runs efficiently on NVIDIA hardware. This software-hardware synergy is what allows them to maintain those 75% gross margins that make interactive brokers analysts so optimistic. However, the past performance of 30,000% returns over the last decade is not a guarantee of future success. We are entering a phase where the law of large numbers becomes a real obstacle. To double from here, NVIDIA would need to add another $4 trillion in value, effectively the size of the entire German economy. This is where investment help becomes crucial. Many investors are turning to Fidelity Wealth Management or looking for an intelligent portfolio that can manage this concentration risk. If your individual brokerage account is 50% NVIDIA, you aren't just betting on a company, you're betting on the entire global trajectory of artificial intelligence without a safety net. Comment below how many shares of NVIDIA stock you currently hold and whether you think the new trade policies will help or hurt their 2026 revenue. Looking ahead to the future outlook, we have several scenarios playing out. The best-case scenario is that inference scaling becomes the next big catalyst. If models start requiring massive amounts of compute at the moment of use, not just during training, the demand for chips could actually accelerate even further. This would be a massive win for SoFi active investing participants who are looking for that next leg up. On the flip side, the risk of an AI bubble pop remains a constant shadow. If software companies like Microsoft and Google don't start seeing a clear return on the billions they are spending on these chips, they will eventually have to pull back on capital expenditures. This tension between the expectation of endless growth and the reality of corporate budget cycles is the most important thing to watch in the coming year. The Robinhood app and Robinhood Investments community often focus on the excitement of the Santa rally, but professional Fidelity trading platform users are looking at the 2027 forecasts. With sales projected to rise another 43% in 2027, the math says the stock is actually cheap on a PEG ratio basis, currently sitting around 0.85. This is the ultimate paradox. The world's most valuable company might also be one of its most undervalued growth stories, if you believe the analyst consensus. But as we've seen, consensus is often just a lagging indicator of what happened yesterday. In the final analysis, your investment strategy needs to account for both the tactical and the fundamental. Whether you use SoFi trading platform, interactive brokers, or Fidelity IRAs, the key is understanding that NVIDIA is no longer just a ticker, it is a macroeconomic indicator. It moves the entire market. If NVIDIA sneezes, the S&P 500 catches a cold. We have seen a clear breakout from a bullish wedge this week, which signals that for now, the buyers are back in control. The technicals are aligning with the fundamentals, but the gap between expectation and reality is widening. To wrap this up, the core insight today is that while the surface level movement is negative, the underlying institutional flow remains robust, albeit cautious. The expectation of a smooth Blackwell rollout is currently being tested by the reality of geopolitical complexity and supply chain limitations. We have seen a stock that has redefined the online investment world, moving from a gaming niche to a $4.5 trillion titan. The contrast between the retail hodl mentality and the institutional rebalance strategy will define how the stock performs in the first quarter of 2026. Stay focused on the data, keep an eye on those Fidelity mutual funds rotations, and remember that in a market driven by AI, the most valuable asset you have is your own human discernment. Like, comment, and subscribe reminder. If you found this market analysis valuable, please make sure to like the video and subscribe to the channel for more deep dives into institutional trends. Don't forget to comment below with your take on NVIDIA's 2026 trajectory. We read every single one. Finance disclaimer. This content is for informational and educational purposes only and should not be construed as professional financial, investment, or legal advice. Investing in the stock market involves significant risk, and past performance is not a guarantee of future results. Always conduct your own research or consult with a licensed financial advisor before making any investment decisions.